This is urgent. I'm your host, Steve Van Metre, and thanks for joining me today. And our lead story today, it's Bank of America's urgent warning. And we're going to show you why Bank of America is so concerned, because this is something that's not just going to affect all of its customers, but millions of Americans. And we'll show you just what you need to do to position yourself. And there's a reason why we love every Sunday to talk about the technicals, momentum, and machine positioning of the markets, because what Bank of America says is coming, well, there's a way that you can avoid it. Now it's over to Bloomberg, where we picked today's story up with that headline as Bank of America's hardened it. This is their leading analyst, says the stock rally is close to triggering a sell signal. And this comes at a time when we're seeing a huge wave of baby boomers hitting retirement this year. Some of them are even leaving their jobs early because of the equity markets. Everyone believes that the bull market is just beginning and stocks are going to roar higher. But Bank of America is saying, well, hold on a little bit here, because the bank's custom bull bear indicator rose to 6.8 in the week through February 7th. The reading above 8 would suggest the bullish trend has run too far, flashing a contrarian signal to sell, according to their lead strategist. And bear positioning in 2023 was the market's best friend, he said. But after investors bought the S&P during last year's 24% rally, the exposure is now flipping from tailwind to headwind. And he cautioned that in bubbles, which we can argue we're in, markets show little respect for positioning or for valuation. They solely respect policy and real interest rates, and this could be a danger as more and more investors, particularly Bank of America's clients, as they're warning here, pile into the U.S. equity market, hoping that it's never going to go down again, but hold tight, because even fund managers' cash levels, as well as inflows into risky assets, are also among the metrics to watch, he says, for potential red flags. A sell signal will require additions of about $20 billion into equities and about $6 billion to high yield bonds over the next 2 weeks, which is absolutely possible. Of course, when we factor in the machine positioning here, we're going to note that the machines now are maxed out virtually much on their exposure. There's a little bit more they could go, but on the major indices, particularly here in the U.S., well, according to Goldman, they're saying that the Russell 2000 was the first index to pass the short-term threshold to the downside, but momentum on the NASDAQ, S&P remains strong and well above their threshold to sell. NASDAQ at 4.4% over, S&P at 3.3%, suggesting the only risk now are small caps. But remember, where small caps go, well, the large caps eventually tend to follow. These are all part of Bank of America's warning signs that if you're focused on the market only going up and you're doing nothing to control your downside risk, well, that is the big problem. Again, this is why we look at the markets every week, to show you how to position yourself. Now let's take a look at Nomura this week. No concern of downside selling. They're maxed out almost across the board. You can see a couple indicators here in red. And if you're wondering why this blurred, this is proprietary information, and we do not have permission to show you the full coverage here. But keep in mind, their buy signal, well, there is none. Under 48.11 to sell. The market's over 5,000 on the S&P. Again, no risk to the downside here from the machine positioning. But let's take a look at our own screens, because that's what we love to do here on Sundays. Momentum remains positive on the S&P. The relative strength indicator is in overbought territory. But one thing that's important to note here is that markets can stay overbought for extended periods of time. So if you're looking for places to take advantage of, perhaps the U.S. equity markets aren't the place. We've got some wonderful other signals to show you in today's show. So hang tight on that, because the moving average convergence divergence, or the MACD, well, it's got a positive cross too. Everything here showing it's overbought. Even our own Momentum Timer Pro, which takes all these signals like the RSI and the MACD that people trade in and out of too early or too late, and we smooth this all out. And we've got 17 consecutive daily buy signals. But here's the worst part. On a 1 month window, it's maxed out to the long side. Same with the 3 month window, and the 6 month window for momentum is almost maxed out. Telling you momentum here is extended. Now, there are 3 coupon codes in the description below for all of our reports for a 3 month free 1 month, not 3 month, free 1 month. So grab them while you can if you get to checkout. And of course, there's no box to put the code in. That means 3 people beat you to it. We have a buy it open. We use our own signals here to show you how to trade. Back on November 3rd, that trade's now at 15.71%. And one thing that's important to do here is raise your stop loss levels up. You'll notice that we raised this from last week. This is something a lot of traders and investors don't do. They don't put stop loss levels on, and they don't raise them as they're making money. Now you might say, well, wait a minute, Steve, my portfolio, my 401k doesn't have stop loss levels. Well, make one, and if it goes down and breaches that level, then you can sell it. You don't have to have an implicit stop to manage your money. And the upside target, well, who knows? When you break out above the last peak, sky's the limit. Downside target, we've revised up to 482.64. The chart here really isn't much to see because, well, all you can note is it's just in breakout mode. And where it stops, well, that's only the sellers know at this time. Let's take a look at the tech window here because QQQ, and this thing is just driving like crazy. Again, momentum positive. The RSI, again, overbought territory. Key thing here, even with the MACD, is markets can stay overbought for long periods of time. Momentum Timer Pro, 24 consecutive daily buy signals. We nailed this trade back on October 9th, and the reason we nailed this one so well is we set our stop losses with enough margin to really fluctuate. There was an initial dip after, you remember, after we bought into this trade, and then it's just gone up from there. That's up 20.63%. And again, you can be bearish on the economy, but you can still be bullish on the market when you have the right tools. That's why we give them to you, because notably our machine positioning here, you see this is our CTA Timer Pro report with our fast algorithm, our slow algorithm. We are ahead of the machines almost every time. The reason why is we run a historical overlay. They don't. We give you the advantage that no other report on the market has. Again, 3 codes for a free month in the description below. Raising our stop loss level here, Friday's close, even higher than last week. As we note, downside target, we're raising that up as well. Let's take a quick look at QQQ. It's the same story here. You know, when a stock really breaks out, there's really not much you can do about this other than raise your stop loss level, hold on to your gains. It's the biggest mistake most investors make, and you'll hear it all the time. People brag about, man, I'm making all this money in the market, and then all of a sudden one day they're quiet because the market went down. Why? Because they didn't hold on to those gains. It's something we want you to do and teach you how to do that. Now let's talk about opportunity in markets, because if you're looking at the U.S. equity indices, they're stretched. And Bank of America says, wait a minute, look, we're going to see a reversal signal pretty soon here. But how about where the opportunity lies? We've been talking about China, and even BofA says state funds drive the biggest ever China stock inflows, nearly 20 billion. Came in last week, which was a record. On this had to do with state-backed investors coming into the market. This according again to the team led by Michael Hartnett, and that accounted for almost all of the 20.8 billion that flooded into emerging market equities. The past week saw onshore China equities rebound sharply as investors bet on more forceful government actions to stem a prolonged stock rout. And when people believe that whatever it is, whether it's a central bank or in China's case, a government is coming in and putting a floor in the market, that is one of the biggest buy signals you can ask for. Oh, good. Our reports were all over this, as you're about to see. Here we have China, large cap FXI. Now, if you're late to this, you think I'm getting late. No, you're not late at all. Momentum turned positive here. We now have the RSI moving up off that 40 level. That's key. You want to see RSI above 40 for momentum to turn positive. The MACD, you want a positive cross. We've got that. 5 consecutive daily buy signals on Momentum Timer Pro, so it was still early in the opportunity. You notice that our signal said to buy it on January 29th. Now you say, wait a minute, it's down here. Well, it's okay, because you know not every trade you're going to buy goes up. And if you have the skills that everything you buy only goes up, well, that's amazing, but that doesn't always happen. You have to manage your stop losses, allow some downside risk here a little bit. We're down 0.89%, but this thing's got a ton of upside. I'm going to keep the stop loss levels right where they were before. 50-day moving average is looking where the next upside target is. Downside target's got some move down below, but notice that our machine positioning here, because we run a historical overlay, is telling us that look, the big machines should be following with buying in this. We note from Nomura there is potential for their machines, not on the U.S. equity indices, but the foreign industries to buy. Technically, this looks good. Let's take a look at the charts here for FXI, because this is a nice setup that we're seeing here. You notice the last time there was a bottom, we've talked about this on the show, there was a 50% move in 3 months. I mean, this is what you're looking for. You know, you don't need to trade 2 or 3 times a week to be successful. You can have 1 or 2 great trades a year and be super successful. So here you have a series of higher highs that are building here off of this low. It's getting higher and higher, stepping up, looking to break out. Next big move here into the supply zone. This is where you've seen sellers in the past, right at the 50-day moving average, a breakout above that. Now you're talking really upward move of 26.16. There's a lot of potential here, as you can see on this trade. So I like the opportunity on FXI. I like the positioning on this one. And let's take a look at another trade that we had on our report. EWH, this is Hong Kong, and we flagged this one as well, where our machine positioning was deep short. And now one thing that's great that we do for all of our subscribers is, Steve, can you make this signals easier to use? Well, on first page now, both reports for CTA and Momentum Time Pro, it tells you when the signals flip, so you know which ones exactly to look at. We'll have a guidebook as soon as compliance gets done reviewing that, but Momentum is positive on the Hong Kong ETF here. Momentum Time Pro's got 4 consecutive daily buy signals. Now we're down a little bit, but again, that's just to be expected when you're trying to bottom fish and getting these early signals. There's going to be a move up and there's going to be pullbacks, moves up and pullbacks before all the sellers are worked out and you see a big upside move. Upside target, speaking of that, 1714. Let's take a look here at EWH and see just where the potential for this one is to go. You see kind of the same story here. The positioning here, you see a low and then you see a move higher and then another higher high set off of this bottom. This is a good sign. It tells you the buyers are buying in at higher and higher levels, just letting the sellers work out a little bit and then stepping in. There you can see upside potential in that low $17 range where the volume profile is just above the 100-day moving average. So lots of potential here. Again, compared to the U.S. equity indices, you got to like the opportunity. How about the bond market? Well, there's really not a lot of selling. We noted there would be some selling from the CTAs. This from Namir. You see a lot of red here. Well, those are a lot of the U.S. bonds. What we're seeing is they're still net short. There's some of the foreign bonds that they're a little bit, they're long. All this tells you here is if you see prices on the bond side settle, there is a potential for a short squeeze, and that's exactly what the charts say is coming. Let's take a look at TLT, because momentum's negative. It's just coming off near oversold territory, around 44 on the RSI. We've got 2 consecutive daily sell signals that picked up on Momentum Time Pro. Our trade, we're down 2.42%. Remember, we were down a whole lot more. Why? Didn't put a stop loss level on. So I showed you how to recover when you don't do that, because we want you to do that. We want you to use stops. But if you don't and you forgot to, well, we can show you how to use reports to dollar cost average in. We like the upside here. Target 157. Downside target revised a little bit lower, but I'm going to show you why I don't think that is quite the base case, because when we take a look at TLT, there's something really interesting here. See this volume profile line? It's sitting right at what? The supply zone. That is between these 2 purple lines where buyers have been at. You see sellers before were here, but now the sellers have flipped to buyers. Every time it gets down to the zone, what do you see? Buyers show up, and they're putting in this volume profile here. If we zoom out, well, what do you see? A beautiful bottom here. Let's zoom into the 1-year chart, and what do you see? A left shoulder ahead and a right shoulder forming here, and beautiful move upside here into the $100 range. A breakout there, man, now you're off to the races at 109. Beautiful setup in the bond market here. Got to love that. How about gold? Well, I don't like the setup for gold here too much. Momentum's negative. The RSI is at 48. MACD's got a negative cross. There's really nothing to get excited about. I think if you're looking for an opportunity, maybe gold miners would be a better place to keep your eye on. We had to buy it open back on our signals at February 2nd at 28.21, down 4.4%. Now, if you're looking to trade and you want to avoid some volatility, avoid the binders because they get real volatile. As you can see, if you're bottom fishing for these, you got to keep your stop losses tighter than I probably do on these. But just keep in mind, you have to let the string on the kite go out a little bit because they are volatile. We have 3 consecutive daily buy signals. We see the fast algorithm is short. We see the long algorithm is nearly max short. Potential reversal on this thing coming pretty soon. And again, it's in oversold territory here. Let's take a look at GDX. Again, if I was looking for opportunity, I wouldn't be looking at gold right now, but look at GDX. Every time it gets down to the supply zone, what happens? It reverses. So there's your opportunity. I said back there when we picked up our buy signal, this could happen, but we're sticking to our reports. If this is true and we see the buyers come in here, which they have been many times, well, look for a run potentially back up here into the low $30 range with the first target right around $29.50. That would set up a wonderful trade. Again, put your stop losses right underneath there. We do everything we can to show you how to make money trading on this show, whether it's from our sponsors or from our research reports. How about silver? Well, we got stopped out of this one. Again, this thing is super volatile. No opportunity really to drive another trade on this one right now. We just got nicked on our stop loss. So if you look at a chart on this, nothing too exciting on silver. I still feel there's potential opportunity here, but right now I'd be looking at GDX. And it just traded down slightly into our stop loss, and that triggered an out. Potential here, though, I still think there's a breakout opportunity up into kind of the low to mid $22 range. But again, other opportunities, look at, of course, the international ETFs. Look at TLT, look at GDX, and how about Palladium? And again, here's one when you're bottom fishing. Again, I should probably kept the stop losses a little tighter. We got stopped out at 764 for a loss here, minus 7.64%. And this thing is just kind of broken down. But let's talk about where this thing could go, because when something's down a whole lot, and Palladium is one of those, well, you got to look for opportunities. And you can see, I mean, at some point, this thing's got to reverse. I mean, it doesn't go down forever. Let's go to the weekly chart, and you can just see that, hey, it's getting down into the point where it's had buyers before. So we took an opportunity, we took a swing, we missed. It doesn't mean it's over, because when it settles down eventually and finds buyers, well, the upside potential will be rather impressive. So we're going to hang tight and look for another entry point on Palladium, mainly because what do we see? We're at max short across the board on our CTA. That's the first signal we're looking for, as a reversal, and then we're going to look for a reversal in momentum. I suspect there's a little more downside here. How about agriculture? This is a great trade that's turned out well. Momentum is positive. It's now in overbought territory, but remember, can continue to be overbought for extended periods of time. We're up 5.63% on this trade. We see the upside target 22.42. Remember, we led the machine positioning. We showed you, again, when you use these reports right, the probabilities turn in your favor. Not every trade's going to go well, but we see that more often than not, this is what we see, our subscribers see, and it came down here into the zone. We held on to the trade. We kept our stop losses at a reasonable level, and look at this thing break out, 22.40. That's where I'd be looking to kind of cash in on this, maybe with the breakout move up to 23. But one thing you can do is just keep raising your stop loss levels. We did that. We suggest you continue to do that too. Next opportunity, of course, is into soybeans. 7 consecutive daily sell signals. We're down on this trade. 2.85%. Machines are near max short position. We see the golden signal here on Momentum Time Pro. We got to sell max on the 1 month window. In fact, we even have it on the 3 month window. Looking for a reversal here. Now remember, we had an initial move that we jumped on, and that turned the other way. It's all right. Let's take a look at soybeans here. And what do we know? Ooh, beautiful triple bottom coming here. A lot of upside potential in soybeans. So I love the setup here. Again, just manage your stop losses correctly, and you'll have no problem. With that, I'm Steve Van Meter. Thanks for watching. Thanks for being fans.